Hello, traders, and welcome back again to another episode here in WIC Trading Channel, Wayfield Capital Trading Channel. In today's video, I'm going to take you. Today is Sunday, right? Today is Sunday, the 27th of July. I'm going to be taking you back into the chart. So we'll be going through some strategy development, doing a backtesting on that. So in today's video, I'm going to create a strategy. Okay, I'm going to pick a random strategy and I'll create it. I'll show you how you can work with it. Then we go back into the chart and we back test it. Is it okay? So without wasting much of your time, let's get right in. Please wait, hold on a minute. If you are joining us for the first time here and you haven't subscribed, please remember to do so. Remember to subscribe. Remember to subscribe. Just remember to subscribe. Remember to like this video. And also, at the end of this video, drop your comment about this video. Let me know what you think about it. If in case there are some few things you have question on, just let me know so I can answer them for you right there. So without wasting time, let's get right in. In today's video, guys, we are looking out on BTCUSD, we are looking out on Bitcoin. Okay, the trade on Bitcoin, we'll be looking out on Bitcoin. Normally, what I do is that I usually trade the 30-minute time frame. It's my standard time frame of entry. I take my entries based on what 30 minutes. I trade on 30-minute time frame. Why do I trade on 30-minute time frame? Trading on 30-minute time frame means that whenever I'm sending out signals, I know my receivers have at least, they can, if no matter how delayed they are, they can take at least 15 minutes at most before copying the trade, if in case they are too late, or they can meet up with time. If I'm trading on 5-minute time frame or 15-minute time frame or lower than that, when I send out signals, I will only be the person that will be entering the trade on time, and my receivers they will not be getting the trade on time. So I will not want to focus on that. So 30-minute time frame is an average time frame that I love trading, and all my assets are being traded on 30-minute time frame. Okay, so this is the trade on Bitcoin dollars, Bitcoin trading at the United States dollar. So now we are in the market right here. So what I want to do is that if you can look, I've already mapped out some positions here. If you look where you have this vertical line being mapped out, these are the monthly interval. So how do I map this? Normally I come to my daily time frame. I can come right down to daily time frame. I activate my pivot separator. Okay, activating my pivot separator, you can press the Ctrl Y on your keyboard to activate the pivot separator on your chart. Then I go ahead and I map that out. Okay, I go ahead and I map that out. Mapping that out, that will tell me that from a certain line to another one will give me a specific interval of what, 1 month each. So what I can go ahead is that I can go ahead, make some adjustment to that, and when I'm done, I deactivate back my pivot separator. Then I go back to my trading time frame, my time frame of entry. This is 30 minutes. Okay, in this video, what I want to do is that I will not be using chart pattern here. I'll be doing different backtesting videos showing you how to work with different trading strategies. So if you haven't subscribed, please do so that whenever I drop a video like this, you can pick whatever strategy that you feel you can work with, and you work with it. Okay, if you want my mentorship, I'll be dropping my contact number below. You can WhatsApp me and we can get that sorted out. So let's see what we can have here. In today's video, I want to work with a candlestick pattern. Most people do study candlestick pattern, but they end up ignoring it. Can you trade with candlestick pattern? Of course, yes, you can. Can you be profitable with candlestick pattern? Of course, yes, you can. But now the problem is, what candlestick pattern can you work with? That should be the problem. What candlestick pattern should you do? Not all of them are profitable. Some can give you a series of losing streak before you end up having a positive trading outcome. But now, one thing you need to understand, at the backbone of everything, trading strategy only helps you to identify where you can get inside the market and also where you can get out of the market. When you get in the market, it tells you where you can also get out of the market, and it gives you that certainty that, okay, this market has the probability of playing out like this. Remember, trading is a probability-based business. So looking out on this, I'll be trading with something called the Tweezer tops. I'll have Tweezer tops and bottom. We also have we have on natural candlestick pattern that you'll be seeing me creating videos on, and I want you to keep that out. Okay, remember, just mark this video somewhere. Candlestick pattern that I want us to have a practice on. We're working with Tweezer tops and bottom. They are very powerful. The hammer candle is very powerful. Okay, the hammer and the inverted hammer also, they are very powerful. I'm going to show you how you can work with that. Then we have the morning and evening star. Okay, the beautiful morning and evening star pattern is also another beautiful candlestick pattern that you can also be working with, right? So alongside the other candlestick pattern, right, we have the three black and white crow. Okay, the three black candlestick pattern, okay, making up the three candlestick patterns, and then one candle completely engulfs the three candlestick pattern. I'll be coming back to that. So in this video, what I want us to work on is that we'll be working on what we'll be working using what we'll be working here using the tweezer tops and bottom. What does the tweezer tops and bottom simply implies? It's made up of two candlesticks. The tweezer top and bottom is made up of two candlestick pattern, just two, like I said, two candlestick pattern. It's made up of a bullish and a bearish candlestick. If you spot a bullish candlestick and a bearish candlestick following the second candlestick, that would signify you a selling opportunity. If you signal a bearish candlestick first, then a bullish candlestick following second will signify you a bullish opportunity for you to buy. Now, how does it play out when it comes to this? Okay, I want us to look out on something here. I want us to look out on this. I want to spot on this two candlestick pattern that we are seeing right here. Are you seeing that before this structure? Excuse me. Okay, before this, okay, that's an equalistic candlestick, equal in structure, meaning a spinning top. This is a beautiful spinning top here, guys, but we are not trading on spinning top right now. So I'll be making a video showing how you can trade with spinning tops and bottom candlestick pattern as well. But in this video, we are focusing our attention on what? On the tweezer tops and bottom, because I want us to develop a powerful trading strategy using this pattern. And you'll see that here we'll be developing at least 25% gain using 1% risk. And I always recommend, guys, when you're working with candlestick pattern, your risk management can be within 1 to 2% maximum. Sometimes it's preferable to even sit at 0.5% or even 0.25% risk, and you'll still be making over 10% a month. Okay, so I don't want to speak because I want to speak. I want to speak at the same time. I also want to be showing you this right here on the chart. So I want you to pay attention on what I'm going to do, so we do it together. Now, what are the conditions to trade the tweezer tops and bottom? The tweezer bottoms signify it's made up of two candlestick pattern. Like I said, the first candlestick is going to be a bearish candle. Then the second candlestick is going to be a bullish candlestick. One thing that we want to pay our point of interest, one thing we keep as point of reference is that when it comes to this candlestick, right? Let's say we have a body of this candlestick. We have the body of this candlestick here, and we have another one here. Since this is the bearish, let me just change the color right down here on this. Okay, let me just pick up a red, signifying a red candlestick. Now, our point of reference is what? Our point of reference is the rejection of price on that candlestick. Okay, our point of reference here is the rejection of price on that candlestick. Being this, for us to be able to spot a beautiful tweezer bottom means that we need to see this candlestick playing out. Like I said, for a tweezer bottom, the first candlestick is a bearish candle, the second candlestick is a bullish candle, but the area of interest is at their tail rejection. Okay, the weak rejection where price got rejected, that more. So that is our point of interest. Now, the longest part of that rejection should be at the bottom for both candlesticks, not at the bottom for one, then the other one. I mean, if I spot this right, then we have another weak rejection being happening right up here. So this candle is definitely not what I'm looking for. This is not what I'm looking for. My point of interest is that this candlestick here, the one below, should be the longest. Okay, the candlestick below, that is the rejection of price below, should be the longest candlestick pattern. I mean, if I'm going to look within this two structure, I want to see the longest price rejection coming from the bottom part of these candlesticks, of the bearish candlestick the same and the bullish candlestick the same. That is what I'm interested in seeing. And when we spot this, this is our beautiful tweezer bottom. When you spot this, you take in your entry at the closing price of this, and your stop loss is placed somewhere below, right? You place your stop loss somewhere around here, then you place your entry somewhere around here. This is also going to be your entry level. This is going to be your stop loss level. Now, what are the conditions that you are going to apply here before you become profitable? I'm also going to come to that. But now let's look at the situation. Like I said, you use this for buying opportunities. When it comes now to selling opportunities, you spot and invest of what is happening there. So this one is going to be I'm going to change it. Okay, I'm going to change this structure here, then change the color. The color of the previous is going to be, let's say, it's a bullish candlestick, right? So the last candlestick is going to be a bullish. Then what I want to do is that now the rejection that we're going to look out for is coming out from the top, not at the bottom. That means the longest price with the longest area where rejection is coming from is from the uppermost part of this candlestick. Okay, that means we can have something like let's say if this candlestick happens to have minor tail rejection. Okay, it happens to have minor tail rejection of this sort. So now when you look at these two candlesticks, you can simply see the difference. When it comes to trading, you are trading what you see, not what you think that is going to be. So looking out on this structure here is that when you look at this the tweezer tops, when it comes to the tweezer top formation, is that the rejection of this candlestick, that means the sellers are rejecting price movement, they are pushing price to go more down. On the bullish candle, right, the bullish candle, we had the price rejection from the top, then followed by a bearish candle. The same also have price rejection from the top. What can you see in this? Guys, let's look at this. It's not just about chart. It's not just about chart, but what is happening behind the chart. That's our point of interest. So we look at the market structure of this nature. We look at on this dimension, looking out for what buying opportunities. So I want us now to go into the market now and look at real examples of what is going to happen. Like I said, we'll be doing this for 1 month. We'll backtest 1 month, and you can also go ahead, you backtest this for at least 3 months before you work with it. You can backtest it for 3 months to know. You cannot have an error in result in 1 month, and you cannot have an error in result in 3 months. Let's say you can do it in 1 month and call it it was out of luck that we had that result, right? But you cannot do it for 1, 2, 3 months and you still calling luck with the same result. So let's find out if this is going to work. We are doing it for 1 month. Then your assignment is going to be that you are also going to sit back and you do this for 3 good months. Then you come back to this video, you drop that in the comment section and let me understand what your feedback is. So looking out on this, like I said, I'll be having out my first trade here. I take my first trade from this structure that we first of all saw. Then now my stop loss, my first trade happens to be a losing trade on this, no problem. Then looking out on the second trade, when I look up within these two candlesticks here that I'm seeing, right? When I look up within these two candlesticks, this and this, when we look at, we see that we have the longest tail rejection from the bottom part of it. Now the closing price of this bullish candle is going to be my entry. Then my stop loss is going to be at the lowest point. That is 24,000 points below. And now my take profit is 5 times. Understand this, my take profit is 5 times my risk. I'm going to be working with 1:5 risk to reward ratio in this market. That means for every position that I take, my TP is going to be 5 times. Then I'm not going to do any break even on this market. That means a loss is going to be a loss and a win is going to be a win. I'm not going to say I shifted this into break even. I want us to be more realistic. Okay, 10 times 5, we had this 10,000 times 5 is supposed to be 50,000, but we went up to 40,000 points away from that market, also resulting to a loss. And when we look out on this aspect as well, we also have a loss right there. Then now coming back on this structure here, okay, we also have, when we look at on this two, when you see that they are kind of having a resemblance in structure, you can also go ahead, you use your crosshair to measure. Okay, use your crosshair, go ahead to measure, and you'll see that this also was a beautiful cell. So that's 50. 5 times 5 is what? 5 times 5 is 25. So we're going down to that structure, 24, 25. Okay, now we have our first market going down in that lane. Now when we have the market that is selling off like this, what we want to do is that we'll be looking out for just selling opportunities. The same thing we did with the buy. We saw the first trade on a buy, then later we spot more buying opportunities associated to it going up, so we keep looking for buys. So when you see the small rectangular pattern, that means these were trades that went into a loss. The bigger ones were trades that went into the profit. So continuing up with this, right? So let's look at this structure. We are looking we just want to identify one and the same pattern playing out. Okay, that's trading. Identify one opportunity, do it, leave it, breaks it. So 10 times 5 is 10. We also have our second trade here playing out. So we have our second trade right there. Now we also have this structure playing out. That's 57 pips. Okay, so looking out on this, we have another trade. Do we have any other thing here? We don't have any information on that. Then going back, since since my last trade that I took, that the price was here, so I will be looking out for just selling opportunities to get up to that point. And looking out on that, I've not been able to spot any other trades so far. So coming back down along the structure, going bearish. I can't see anything right there now at this point. Okay, I just want you to watch this video to the end, guys. Don't skip it, don't skip it. So let's do it. Okay, looking out on this, I spotted another opportunity here resulting to a negative trading outcome. Then I spotted this also resulting that on a negativity on that aspect. So when we spot this, do we have another trading position around here? We have none, right? I'm taking out just one thing, then I'm doing a repetition of it over and over and over throughout. That's trading. Have a strategy, pick it, develop it, use it. Okay, resistance 580. We have that structure. We have another trade here also playing out 18 times 5. That's it, right? So we have, look at that. Okay, 7 times 5, 17 is 85. So when I down to 87, having a 1 to 5. Then we also have a minor loss there on the short. Then coming back to this level here, we have a buy, beautiful buy, which could have been around this level, having our entry right here. Yeah, to have our entry was supposed to be here from these two candlesticks, guys. So our entry was supposed to be there on the buy. Our stop loss right down to almost 50 pips right down here, because I'm dividing this by what? I'm dividing this by I'm dividing this is 49,000. I'm dividing this by 1,000. So when I do this now, it's giving me 49 pips. So taking out on that, and boom, is also resulting to a loss. So I'll be a bit faster on this, so we're able to see, like, all of us have spotted the concept. So I'll be a bit fast on this so that I don't want this video to be too long, and I also want you to see the result of what we have been able to do. So looking out on this structure, again, we had another buy, zero result, having this, nothing, another position in here, right? So if we look out on that, we found any other trade again. We have this on the buy. We have nothing. Here we have a buy, 6 times 5, 30. We have another one right here. I just want to measure this, 16, 13. So this cannot go because the downward part is shorter and the upper side is the longest instead. So when I shift this away from here, so that we're able to have one selling opportunity right there, resulting into a loss. And then here we have nothing. We have one shot. Okay, going up, we have this. We have a buy here at 8 pips, right? We have a buy at 8 pips. So 8 times 5 is 40. We went right up. So we also have this resulting into a loss. It's very clear. So 13 times 5 is 65. Then 15, 75. Remember, we are trading at the 1 to 5 risk to reward ratio, guys. So when you see me calculating and doing the math, just trying to be a bit ahead of time so that we're able to catch up. 24, it's 120. So we had a trade in there. So we look out here, a bearish, and this also have that 22, 65. So 110.5. So we look out on this again. We have another one here, 24. We have another trade 5x the risk on that aspect. So we had a loss, we had a sell at that top with a negative return. We had that also on a negative return. So when I look out on this as well, I also have a buy right here. Okay, that's the buy, 27. 7 times 5 is 35 on that. So I'm going to go for 135. 135. Right, I got right up there. So I'm going to do this. So now we proceed. So I have a buy right here. Having this, that's 11. 11 times 5 is 55, guys. That's it, okay? 11 times 5 is 55. So are we going to go up there? We are going to meet up the loss. Came back 11. 11 times 5, 55. 55. So coming back here, we adjust our stop loss to entry. Look at, guys, we never got hit, so we are still active in the trade right up to this level. So when you look at on this, so we are on this position now, what we are looking out there is that we are only looking for just buying opportunities. There's nothing more that we are going to do, just buying opportunities only. That's our point of interest now, buying opportunities. So if we look at here, we see that okay, we have another trade theory, okay, that's 65, 3 times 5, 15 plus another, okay, so we have another buy in here. 2 times 5 is 10. Then when it comes to trading, you just have to be very good with math. It's just about math, probability and math. You need probability and you need math. That's what we use in managing funds, probability and math. So I just want to do this. Probably within the week, I'll be showing you one of my main strategies that I use in managing funds. So if you haven't subscribed again, I want you to subscribe and turn on the bell notification icon so that when I drop that video, you'll be able to see. I'll be going ahead to show you the video that we use, a strategy that we are going to use, that I'm going to show you how I developed, show you how we use it, show you the risk management that we worked with, and how we implement that into managing funds with it as well. So I'm going to be showing you that as well. Like I said, I wanted to just pick out this random strategy. I developed it, then I show you that trading is all about knowing what you are doing and sticking to the plan. That's just it, okay? So now let's continue out with this. Like I said, we are just looking out here for one thing only, just buying opportunities. So I'm saying this is like they're almost the same, then I want to measure that out. So I'm having 175, 172, and I'm having this other downside is shorter. So that's not it. I'm not going to take that. So we'll look at here. I'll just look for buying opportunities only. I have one buy within. So it's a loss. And going back again, I have another buy on a loss. I have another buy on a loss. Okay, so keep going like that, and the same thing happened here as well. When you see me marking out the smaller boxes, just know that those are positions that we incurred losses on. Okay, those were positions that we took losses on. When you see me marking the bigger ones were positions that actually played out in our favor and we made good profit out of it. So this is actually an uncut series showing you what other mentors will not be able to show you. Right? You see the losses that we are taking here together, and at the end of it, you will be seeing if you'll be the one to judge it if you are going to be profitable or not. So just buying opportunities only. Couldn't find any. There's none. We have none. We have 1 year. That's 8 times 5 is 40. 8 times 5 is 40. We have it right up there. 8 times 5 40. $25, 125. Have a loss. We had a loss. We had a loss. Having another loss there. Then we come back here. That's 10 times 5 is 50. Okay. So that would have been $10. That's 100 pips or 500 pips more. If I'm taking the lowest trade size there at 0.01, that would have been me costing $10 for $50. 3 times 5 is 15. 3 times 5 is 15. So we had that for the profit. So again, now we are looking just buying opportunities right there, guys. Just buying opportunities. Like I showed you, if you haven't watched the video from the start, go and watch it from the start. I explained the method there, very simple, right? So we develop it, then now we take the strategy, then now we are working with it now in real time to see how the realistic results are, picking out random strategy to work with it, or to see if working with a candlestick pattern can we be profitable with it or not. Are we gonna be profitable with it or not? 5 times 5 is 25. So we had another win. Yeah, we had another win right there. We have another one right here. Having another beautiful trade right here is 24. Okay, then 2 times 5 is 12. So 120. So checking right up to this top right, so to this final top right, we had another buying opportunity again coming back in this market. So all we had right now is just the last price at this top. So what we have here is we have another trade. No, so we had this. Now we can take now a sell. So that we are usually done with our buying structure right here. So the last trade that we had right at this high here was a sell at 77. 7 times 5 is 35. And then another 7 again times 5, making it 35. That should be 35, 37, 38, 5, guys. So this approximately to 40. That's our take profit. So along this axis now, we are only looking out for selling opportunities. Like we had this beautiful one here, beautiful sell. Then back to this other top here, we had this other one here. 3 times 5 is 15. 4 times 20, so we have 16, 17 on that. So coming back again, we have a loss. We had a loss in there. We look at going on that opportunity. We had another sell-off here. Okay, which let me put out my crosshair. They are looking at trying to match the equal tops. So equal tops there is 4 times 5 is 20. Okay, we had a win. Then here we have a loss. We have another loss inside this way. So now we have come to the end of our 1 month backtesting. We have come to the end of our 1 month backtesting. Now let's see how the performance in real time, how does it look like, the losses that we had. There's something like I always mention about the aspect of losing streaks. Okay, I always make mention of the aspect of losing streaks. Whenever we are trading here, we are trading at a 1 to 5 risk to reward ratio. That means for every dollar, our take profit is 5 times. I have not done anything like my break even. I had to look at the market. No, you just have to look at the market in real time. There are no modifications to anything whatsoever. Yeah, working there with this. So I usually backtest with the platform that I trade with. I trade on MC5. Sometimes I go to TradingView to make it more beautiful when I'm analyzing. But realistically, I trade on my MetaTrader 5 and I do my analysis from there. I don't need any fancy tool to trade or to analyze any other thing. I just see the market the way I see it and I trade it the way I should trade it. The important aspect is sticking to my risk management and also sticking to my risk to reward ratio. That's just it. So in real time, guys, these are the number of trades that we took. This is 30-minute time frame. So like I said, risking 2% maximum should be it, and you can even go for 0.25% or 0.5%. You'll still be able to make profit. Now, how many trades will be able to have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30, 31, 32, 33, 34, 35, 36, 37, 38, 39, 40, 41, 42, 43, 44, 45, 46, 47, 48, 49, 50, 51, 52, 54, 55, 56, 57, 58, 59, 60, 61, 62, 63, 64, 65, 66, 67, 68, 69, 70, 71, 72, 73, 74, 75, 77, 78. So right there we have 78 trades, guys. Excuse me, I just want to take out my notebook. We have 78 trades. Let me just put that up right here. Okay, so we have what? We have 78 trades. Let me just include this in my let me just include this and include my text this thing here. So I just want to include that. Excuse me a moment. Oops, should be on this way. Okay, some two. Right, I just want to include my text. So we had how many trades in total? We had 78, guys. We had 78 trades in total. Okay, so Okay, we have 78 trades in total. That's a number of trades that we had, right? So if you're having 78 trades in total now, how many of them went into a loss? How many of them? You'll see that majority of these trades will go into a loss and will be about 20 to 30% win rate. So right now we are counting just the bigger bars, okay? The smaller rectangular structure are the trade that we had losses on. So now we want to know how much winning percentage or how much win rate we have in this market. We are going to count out the winning trade that we had. We had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28. Okay, so we have 28. We had 28. We have 28, guys. Let me just shift this one here. So we have 28 winning trade. If you are taking away 28 trades, okay, let me put on my calculator on the screen so you're able to see this. Okay, let me put out my calculator here. Having my calculator means we have 78 trades in total. 78 minus 28, that's 50. Okay, so now we have 50 losses in a row. We have 50 losses, not 50 losses in a row. Remember that. And I'll be putting this in red so you'll be able to see. So this is the market, right? We had 78 trades. We have 78 trades in total. 28 of them went into profit. 50 of them went on a loss. Now, 50 for each 28 trade that went in our direction, one was giving us 5 times. Okay, one was giving us a return of 5x our risk. So if I'm taking 28 here times 5, that means it's going to give me 140. Okay, so if I'm taking this now to this level here, I edit that. That means we are up with a return of 140. Okay, 140 now. We had 140 minus what? 140 minus 50. So we had 140 minus 50. If we take away this 40, this 50, that means we are going to have an overall return of what? 90%. Okay, that means we are going to have an overall return of what? 90%, guys. So if you are using this strategy, and you are putting up just 1% risks in a month, that means in this month actually you'll be up 90%, right? You'll be up 90%. Now if you want to understand what your win rate was, win rate is different from win percentage, right? The 90% here is 90% win percentage. That means in this month we're to make a profit of 90% of our capital. If we are using 1% risk, okay, if we are using 1%, this will be able to make a profit of what? 90% of our capital. Now if you are risking 0.5%, 0.5% means that you need to take at least 200 trades in a row before you lose your entire capital. If I divide this 90% by 2, that means if I'm using 0.5%, I will still be up 45%. I'll still be up 45%. Just imagine that, guys. Then if I'm risking this at 0.25, that means I'm taking now at a quarter risk, right? So taking this now at 0.25% risk. So this now is going to be giving me a net profit of 22.5% in a month. 22.5% in a month, risking just what? 0.25%. That means I have to be long. I have to be on the negative side 400 times before everything is gone. And you can see how this can possibly play out. Now, let's talk about the concept of our win rate now. What was the win rate on this strategy? There are hedge funds that are managing billions of dollars with just 20% win rate strategy and 30% win rate strategy. Within that range, it is very difficult in real time to have a 50% win rate strategy, not to talk of mention 90% win rate, 70% win rate, or 100% win rate. Now, what I want to do is that I want to understand our losing streaks. Losing streaks means that these were the consecutive losses that we had in a row before we have a winning trade. And winning streaks means that there are consecutive winning trades that we have in a row before we have our losing trades. So on our losing streak here, we have 1, 2, 3, 4. Before a winning trade, we have after this we have 1, 2, 3, 4, 5, 6, 7, 8, 9, before a winning trade, 1 2, a winning trade, right? So we have here 1 2 3 4 5 6 7 8 9 before a winning trade, and also 1 2 3 4 before a winning trade, guys. So it's that our maximum losing trade that we can have in a row here is 9 trades. 9. That means if you are using this strategy, it will be difficult for you to have 10 losses in a row, but you can possibly have 9 losses in a row, and just one profit alone will cover for 5 losses. Then why won't you trade, or why won't you just focus and grow as a trader? If you like my video so far, if you are watching right down to this level, guys, please, I just want to appreciate you so far. So if you haven't subscribed, please subscribe. Let's get this channel to 1,000 subscribers and even more. If you have not watched my video, if you skip my video to this part, go back and watch it. It's very important. You cannot trade if you don't have knowledge. You cannot trade if you don't have knowledge. So most of the time we create content, you just want to see what befits you, and you throw away the information that we have. These are things that you will be paying thousands of dollars for in a paid course that I've given you right there for free. Just like that. I gave you this. So if you have this and you still worry about trading, then I don't know. Then you need a personalized one-on-one mentor, and you can book me up for that. So if you want a mentor that can work with you, that can take you at every step of your trading journey, then you can try me out, and let's see how the results are going to play out. So thanks for watching, and see you on our next video. Bye.